Hey guys, good morning, welcome to the live session of Stocksnipertrading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra-low commission, which starts at 99 cents per lot. Our account's spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by FOMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AAAFx, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Hey, good afternoon, welcome guys. This is our live FOMC. It's Wednesday, February 1st. Okay, we just wrapped up the monthly candle of January. Now we're moving into February. So today, it's a new monthly candle. It's FOMC. Today is going to be a big day this afternoon. So trade smart. Don't over leverage. This goes for everybody. I'm scaling down my trading. I'm going down with my lot sizes as well, because this is going to be a highly volatile 2 p.m., 2:30, 3 p.m. Okay. So, and tomorrow doesn't get even easier tomorrow. Tomorrow we got job openings. Friday is NFP. So lots going on. Okay. But let's go over everything. So you see how nicely everything trades, like after 10:30, okay? After all of that chop that Dave took you through in Wall Street, look at, if you just wait guys, 10:30, look at that beautiful sell-off, come down to the demand, pick up, come right back up, nice V bottom recovery, right back to supply, push right back down. Guys, these are big moves. That zone, it's a big zone. That's a 150 pip zone, okay, up and down. Now we're concentrating, it's just consolidating down here. Again, they're accumulating. So FOMC, are we gonna come right back up and tap up here, maybe break? Is it gonna come up maybe 50% up here, go back down, and we break the lows and we continue to drop? These are the things that we're gonna do, okay? So I'm gonna get started, guys. Let's just go over what is FOMC. How many of you guys in this group, is this your first FOMC? Because I see a lot of new snipers are joining the crew. There's a lot of names that I don't recognize. I know most names. Juan David, I can see, yeah, you're new here. So guys, I'm talking to you guys because most of the guys who have been with us have been through FOMCs with myself and the team here. So you guys, I'm speaking to you guys. Take it easy with your trading. Don't over leverage. If it's your first one, maybe trade very small, maybe even a demo account to see how it moves. Okay. If you want to know what it is, 2 p.m. Eastern, we have FOMC statement right here, federal funds rate. So they're already telling us the numbers ahead of time. Okay. Canada, we were last week, they already increased our bank rates overnight 0.25%. So America is going to follow. So we'll see there. It's already currently 4.5%. You can see forecast is 4.75, 1/4% increase, and the actual will come in here. It may be more, it may be less, but more than likely, it's got a high probability it's still going to be a 1/4% increase. Then at 2:30, after they get the funds rate, then they talk. This is where Jay Powell and all of everyone who is part of this, they speak at a conference to maybe give forward guidance and why they chose a 1/4%, how it's going to affect the economy. Their entire goal is to try and keep inflation in place. So this is the first one of 2023. This is a critical FOMC. It's 9 times per year, and the FOMC, this one. So I'll go over that, guys. If you come into the folder here, Juan, right over here, we click on the folder, gives you all the information you need to know. So here's the history. If you guys want to backtest, the last one we've had was December 14, 2022, November 2nd, September 21, July, June. So if you guys want to see backtest, you can. It's available. What is this? Okay, so it's from the Federal Reserve. These guys are in charge of monetary policy. Hawkish is, if it's hawkish, it's more than expected. It's good for the currency, good for USD. Okay, it's scheduled, 8 times per year. Okay, that's how many times it's scheduled, 8 times per year. The next one will be March 22. Okay, so that will be our next FOMC together. What is this? Okay. Why do we care? Why do traders care? It's right here. It's the primary tool for the FOMC uses to communicate with investors about monetary policy. It contains the outcome for their vote on interest rates and other policy measures, along with commentary about the economic conditions that influence their votes. Most importantly, it discusses the economic outlook and offers clues on the outcome of future votes. So it has to do with interest rates and inflation. Okay, so this is big. Okay, so let's not fool around with today's session. Okay, if you guys over leverage, it's on you. I try and warn you. Dave tries and warns you all the time, guys. There's only so much we can do here. If you decide to over leverage your account, you need to be responsible for the consequences that can happen. You can make good money. You could also lose a lot of money. So this is something that you have to decide for yourself, but it's gonna be very volatile. So when you're judging how big of a stop loss to use, could be very explosive. Okay, let's start off with a full top-down analysis. Okay, so what I'm gonna do is we're gonna get started with US 30. I'll do NASDAQ and gold. Okay, how many of you guys have already been trading? How are you guys doing today? Have you guys had a good day? Not 50-50, not so good. How's everybody doing right now? Joshua, you're buying US 30? Yep. Pedro, good job. My man, oh, PK, you can unmute your mic, bro. Let me just get you. One second. PK, if you want, you can unmute if you're, or if not, it's I am muted.
Hey, man.
Hey, PK, what's going on? How was your session? Did you guys catch all of this?
Yeah, we caught the downside we caught, but then we got a little bit of the up. And then we tried getting greedy right there, that doji.
Yeah. Guys, see that? PK, did you guys pick up on this from the left? Like over here? Yeah, right over here, guys. See that wick, and there's a little block order. Bring it across, bring it across, bring it across, bring it across. And you see how we just fell right into that demand bounce coming back, and we're holding this area. So this is what we're going to see. If we're going to break below here, this FOMC, maybe we're going to retrace 50% up to there. Maybe it might impulsively break out of here, and look at where our next block is. So real quick, like we can just do a quick analysis of where we could project things to move. But we do everything with a top down. Okay, so let's do this. And if you guys already if you guys have already killed it today, listen to what I'm saying, guys. Okay, please pay attention. If some of you guys are up 1%, 2%, 3%, if you guys want to talk dollar figures, if you're up $100, $500, $1,000, if whatever the way you look at it, that's today's webinar. Later on, we're going to talk about pips, ticks, percent, or money, dollar figures, because everything is different for everybody. Well, however you look at it, if you've made money today, secure a little bit in your pocket. Okay, don't just give it away because it's FOMC. Trade with a little bit. Like for example, if you're up 1.25% today, Keep 1% in your pocket. That's profit. Maybe trade with a 1/4%, but let's try and build that 1/4% to 0.5% to maybe another 1%. But don't give back what you've earned. This is what we got to learn as traders. You want to be consistent at this. You want to do this day in and day out. Not one day you do really well and then the next day you give everything back. So this is what we got to learn. This is the discipline of trading. Okay, so let's do a full top down. Let's see how it's moving. Guys, because I talk a lot, okay? So if someone can tell me when we're like approaching 145, then I'll know to continue to, because I talk a lot. I've had 2 coffees. I got another one lined up. Just keeping going, okay? So daily analysis, we can see up here, we broke, okay? It was an impulse and came back down and we pushed down. We came back up, so you see 34,300 is holding as daily resistance. We pulled back down, it came back up. And yesterday we had that big bullish day and look at what they're doing. They gapped it up, big bearish engulfing candle. So we can come back down and claim this wick and continue to drop down to base support right here at 33,000. So let's again, just do our normal stuff that we do, high and low. Okay, so we know our high is right here, purple line. Oh, thank you, Sherry. Yes, it's my birthday tomorrow, guys. So thank you, I appreciate that. Okay, so I locate also my low of the day right here. So we see the range. We have a big range today, 34,060 and 33,660, big range, okay? So if we do start to come up, like right now, we're getting a little bit of a wick forming on the lower time frame. Some of you guys are buying it. If it does come up, where's our next targets that we could come up to? So what I look to inside purple to purple, we got to dissect this stuff. So right here, we got kind of 2 wicks right here. So I go yellow line. This is going to help us when we're going into the lower time frames. We'll see that yellow line. We could also come up to maybe this area right here, where I want to touch the bodies. Okay, so right here, I'm getting in like here. There's gaps in the market. Okay, so you're not always going to be perfect with these lines. Here's, I got the whole body. Here's the gap in the market. Here I've got over here. I look at the number 33,900, nice psychological area. So I'm good with that. And if we continue, start moving up to the high of the day, we also got to get above this area. So 33,985, that's that 34K area. Okay, so right there. And if somehow they flip this daily candle and it comes up crazy, our next move will be right up here, 34,135. That's good enough, okay? That's enough. We got a lot to go up. If you just want to close it off with a big daily supply right up here, put your big red box right up there. That's the big daily supply. If at any time this week, next month, we come up here, we got to know that there's going to be a big reaction up there, okay? So right now we're coming down. Now we got to focus to downside momentum. We got to look. If we come back and we tap our daily low and we break, where are we going down to? Maybe down to this wick right here, 34,600. If it continues to push down, maybe right here. Let's go wick, body, okay? Nice area, 34,480, 500 area. And then next area down here. If you want to grab that gap, you can. However you want to play it around here, okay, we can go like this. Touches that wick, touches that body. We got a wick. And if I want to continue to go down, I could go down right there. And then if I want to catch the big daily demand area, the big like pocket where everything could fall into, look to the left of the chart. Look at all of these wicks right there. Bring it across and you could have like a big daily zone. If you want to bring it up just a little bit and capture that, have that as a big green box. Okay. Does this make sense, guys? Everyone following what I'm doing? So as if this was 5-minute candles, just like on the lower time frame when we started the call. See where it came up, back up to the supply, push down, come back to daily demand. We go back up and it's making a lower high. We're not reaching that supply. So today's a big bearish engulfing candle. Are we going to come back down a little bit down here? Or is it going to maybe trade consolidate in here? We're already barcoding. It's already started. Red, green, red. Maybe it's going to be green. You know, if it's no change, it might just be range. They'll come pick pending orders up and down, and then maybe we trade sideways for a little bit, you know, but just getting some areas. So are we all good with that on the daily? So today we see they gapped it up. We have no new higher high. It's a big bearish engulfing candle that came down today. We just hit the low and then we're bouncing off there. Okay, so let's go to the 1 hour. Let's see if there's any critical hourly levels that we need to look at. So right now we are concentrating in this hourly, daily to the low of the day. We are in an hourly consolidation. If you look to the left of the chart, we were consolidating right there. Then they broke it up. We were consolidating for a long time in this block, okay? There was that little dip down. They picked up the liquidity, inverted head and shoulder, left shoulder, come down, pick up the money, and then they bring it up. So we're coming right back down into here. So I'm gonna make this as a big hourly consolidated zone, okay? And what we could be looking for is a move below here, a move above here, okay? So right now, we're just barcoding, red, green, okay? Chop. So let's go into lower time frames, 5 minutes. So you see the 5-minute candles now? We're in that hourly area. Here it broke out, okay? That's a nice move. If you're scalping that, okay, from like here to there, that's 60 pips, okay? It's no joke up there. But let's look at other analysis, okay? Other levels. Why am I choosing this area to the left, right here? That's where the market was consolidating. We never really broke there. So let's bring this level right there. That's where we held and then it broke down. So you see how it came up there? That was when we started the call. I had that red supply box, but that's on the 5 minutes. Okay, so now bring it across. So I can see some impulse moves that never materialized up there. So let's go up and capture those wicks right to the up there, okay? So if anything, okay, if we do start to break above here at some point, okay, that might be the new high. And then we come up to that daily, maybe it breaks to this like 5-minute level right over here. Okay, and we'll see how it's trading inside here. If we break below here, guys, okay, if we break, we haven't. We came down today and it bounced. We came down and we kind of bounced. At some point today, if we come for our low of the day and we close below here or push down, we could see it come down to the next daily right here. Look to the left of the chart. See where they saved the market right there? So I like to have a red line there just in case it comes down there. Even if it's just like a nice scalp coming down, okay? That's not a small move. From right there to there, it's about 30 plus pips, okay? So it could come down there, catch a wick and go right back up. But that's one level. Next level is coming down to here. If it breaks, where do we have that? Okay, so come down to that next red line. If it breaks that daily, right there. And then the ultimate bottom is down here. Okay, so what I have is now another green box to show me that this daily level may be where they hold it. Okay, if it comes down here, we got to know where our demand levels are. Okay, and then we're trading in this hourly consolidated range. Okay, so we'll see what happens. Even here, you could scalp up to here. Sometimes like it could be a bullish candle that breaks out and comes up there and gives you, that's 60 pips. Okay, but the bigger move will be above this neckline. Okay, so again, I'll trap it more as we lead into FOMC. Are we all good with this type of analysis, guys? Are we all good? Everybody understands. We could also do like a trend line coming from up here, coming down. So it's still in a bearish trend. We'll see how what happens up here. Okay, all good, guys. Okay. Okay, and I will revisit this chart, clean it up a little bit, but if it continues to trend here, what we can do is we can bring it down in here. You know, we can start to manipulate our moves. Okay, Joshua, you like the music, bro? My man. Okay, so if the music bothers you guys let me know straight up. I will turn it off. I will mute it. Maybe I'll turn it off for the FOMC. I don't know. So maybe people can be more focused. I don't know. But for charting, I like a little bit of beats in the background. You know, keeps you calm. Let's do NASDAQ. Okay, let's see how NASDAQ is moving. It's 120. We're good for time, guys. Lots of time. I personally like to trade US 30. I'm an old man. It's considered to be an old man equity. You know, I'm trading old man securities. NASDAQ is for the young players. It's more tech related and things like that. I love to trade both, but my personal preference is US 30. Everybody has their personal preference. Nas doesn't give enough pips. Yeah, that could be the thing. I was showing earlier, like a Nasdaq, a US 30 candle was about 40 pips average. We looked at the same candle, same time on Nasdaq, and it was 18 pips. So they're weighted differently. There's different type of volume in it. I just enjoy scalping US 30. It's not for everybody, but Nasdaq. Also, if it's your flavor, your preference, I chart it for you guys, and you just follow what security you like. I'll also do gold for the gold traders. You know, maybe they're not trading indices, but they're watching gold. So, but those are the 3 charts I'm going to stick with. I'm not going to be doing like GU or oil or anything else. Okay. If you guys are doing those as well, just focus on it. It's too much to be looking at 5 charts in FOMC. It's okay. So let's take a look at, how Nasdaq has been moving. Okay, daily analysis. So you can see down here, big daily demand, 10,600 level, hasn't broke, double bottom. We continue to push up, pull back, continue to go. But look at where we're coming up to. We're coming up to like monthly supply up here. Okay, where it came up back in December, it came out, rejected, impulse break. Now we're getting some volume closing above. We came back down. We're coming right back up. So we're in a critical area. First of the month too. Lots going on, guys. So just take it candle by candle. That's the way I trade, candle by candle. If people ask me where I think it's going to go in the next 6 months, I have no idea. I can't even remember what I did 5 minutes ago, let alone where things are going to go 6 months. I take everything day by day, hour by hour, 5 minutes by 5 minutes, minute by minute. That's how I trade. I have a bias of where I think it could go, but that doesn't mean anything, you know, unless I'm a swing trader and I'm holding. Doesn't, for a scalper, I don't care where it's going to be in 6 months. I'm worried where it's going to be in the next 5 minutes. So we got our high and low. Okay. What about this critical body from yesterday? Why don't we put a yellow line right here, guys? Okay. Why did I choose this area? That was yesterday's close. And you see how we're sitting right on top of it with this doji candle. Okay. It came up today. It came back down. Now we're coming right back up and it's holding right above here. Okay, so that's a critical static area from yesterday's close. If we continue to penetrate to the upside, maybe we come up to Monday's close. Let's place a line up here. And if we continue to move, 12,200 level, the range, the high of Monday. If we continue to move up right up here, when did we hit this? Friday, January 27. Let's place a yellow line up here. And then I have nothing above me now, okay? So we got to look to the left of the chart. That was that little wick that they squeezed out of there, but let's look for a bigger move over here. I'm coming back now in September. NASDAQ hasn't been up in this area since September, okay? So again, just go through the motions. Which critical bodies do you look at? Where do you get more data? Where are more touches? Right here, body, wick, body, wick. Body, 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 body. And look at the area, 12,289, 12,300 area, nice psychological area. And one more to the upside, like right up there, right up here. It's good enough. You don't have to be completely perfect, but you're getting a good idea of where it could go, okay? That's enough for upside. Let's go back to see if maybe they take us down today, okay? How has it been moving this week? We're in a little bit of lower highs. It came up there, drop, came up, lower high. Came up here, lower high. Today it's coming up, but we haven't got above this wick right here. So we've got above yesterday's high, but still the volume is very concentrated in here. And remember tomorrow, guys, we also have earnings. We got Amazon, Apple, I believe. There's some big tech earnings tomorrow. Okay, so it doesn't stop this week. This week is going to be very, very aggressive. So if we come back to our low of the day and we break, where do you guys think we could possibly go down to? Maybe we come and tap this wick and this wick right here. That's 11,950 right here. Okay. And then I would have like a critical line here at these bodies. What I do there, since it's like this week, I'll draw a big green box right here to show me that that's kind of like some daily support down there. And then if it breaks, then we break down to here. Does that make sense, guys, why I put that green box there? Do you guys understand why I did that? You know, just like if it was a 5-minute chart, okay, you know, here, and see how I'm so close to a daily range? Let's just increase it right up there, okay? And this could be that daily pocket. Maybe if it comes down here, picks up volume and goes back up. If we break below here, then we'll come and tap this wick. Look how it lines up perfectly with these bodies. And then if we continue to drop down, maybe this wick, and one final area, maybe right here. See how we contain these bodies and that wick. Perfect. That's enough top down. You didn't catch that? Okay, so the reason why I put that green box on the daily is because this is heavy volume. Came down, and yesterday we came down, and that's where we opened, critical area. So the volume is contained in there. So that's why I want to capture that area. In case we come down here, there could be big bids waiting in here. And unless it breaks below here, then we look for continued short momentum. So let's go to 1 hour. Okay, so you see how we're trading? So this is what I mean. This is that big daily pocket with the hourly candles trading inside here held as demand. So we might come back down in here, but we want to use this area as demand until it breaks below here. Carlos, what's up, man? Welcome. Okay, guys, so you see how now hourly candles are kind of ranging between our high of the day and the low of the day. Okay, so let's maybe find some critical areas if we can. What I like to do now with NASDAQ is right there, we got rejected. Right there, we got rejected. So let's bring a red box across to show us where our hourly supply is. We came up here, next hour, bearish engulfing candle. We came up here with more volume, they pushed it right back down again. We're trying to come back up again. Maybe it comes up again. Maybe they do an impulse break and then they bring it right back down. Maybe it comes up, gets rejected here, and we push down. So I'm just trying to see local areas where a lot of volume is concentrated right here, held as demand, held as demand, held as demand. So the purple lines show us this, but I'm just trying to make it more visually appealing for you guys, where you can see and understand that this is the high of the day and they're shutting it down. This is the low of the day and they're holding it. So the hourly volume is concentrated in here. This is like a big sniper trapping gap. Okay, they might release the volume, redistribute it to the upside. We might just continue to trade in here. Maybe they release the volume, redistribute it to the downside. But when we're coming down, we got to know where the big demand pool is. If it comes down like this, it does something where it comes down, bounce, lower high, come down here, maybe lower high, and then they break it here, and then we get that big drop in the market. Okay, so I just want to have those levels. And then now what we do is we go on the 5 minutes and we kind of see what we're doing. See the 5 minutes? How we're just bouncing around like this shit. You don't want to trade this, okay? Maybe this redistribution below the daily yellow line, you could scalp that, coming right back up. So see how we're moving? And then we have our big levels below us. We got our supply. So going into FOMC, they're already pushing the market up right now. You can see it's forming higher lows off the bottom. We have a little bit of a trend line. If we can maybe close above the supply area, that's where we might get that bullish push up to this daily, maybe up to the next daily. Okay, that's if you want to measure the move, so you know exactly coming up to that. That's about 40 pips. Okay, scalping. If you look to the left of the chart, see here, this is why I place a red line. I place it at the top of that wick right there, and I know that I could scalp for 20 pips right up there. 40 is to the daily, and then the next range coming up there, let's look at where we have some other key critical 5 minute levels, just so we can space things apart. So, you know, if you're pipping and dipping, you know exactly where you're looking for, okay? And then if we break up there, again, you got levels, okay? And I like to even just cut everything in half too, 50%, like a golden zone on each level, so we know. Okay, do you guys understand what I did to the upside? You guys know red, yellow, red, yellow, red. You guys understand that? If you're new here, just take your time. If you're new here, take your time. But for the old cats that have been in here, you guys probably know why I do that, okay? And to the downside, okay? If we break down here, maybe we fill down to the daily. But, you know, for some of us who are pipping and dipping, if we don't get that full move coming all the way down to here, okay, that's a big move, okay? But it's not just going to be maybe go back all the way 60 pips. It could with FOMC, you know, when you get those big red candles that come down, but sometimes it comes down, up and down, pull back, continue. But levels, look right here. When it dropped right here, where did they save the market? They saved it right here on the 5 minutes. There's a red line right there at that wick. Okay, continue. And then if we trade into this big green box, look at where I'll have a red line right there. Okay, makes sense, guys? So let's keep the charts clean. Let's keep them knowing where we could possibly move to. Even here, if I'm looking to get aggressive and sell this move right here to come down to here, it could just drop right down to this pivot point right there and go right back up. But if I'm scalping that, if I'm looking for some small pips, just like on a fill, that's 18, 20 pip move, okay? Just to that red line. If it comes down there, this is where this could be one level when we get into FOMC. If we're concentrating more up here, we could look for something below here. And this will be the bigger move because this is the big demand area, okay? Does that make sense, guys? You guys understand if I could be looking for a sell below there because the trend line could break, we break below a daily, it could come down like this and drop, okay? But first minute of FOMC, it could just be a big red candle that just drops. You know that. Remember, I can't remember which one we did. It was a CPI or a FOMC where it just dropped, okay? And we didn't even have time to react. But what we did was we caught the next move, okay? So just careful trading. Okay, are we all good with NASDAQ? It's 130 right now. A new 30-minute candle is coming in the market, okay? So they might even break it right now before even FOMC starts. Maybe they come up there, they grab the liquidity, come back down. So I'm not going to be trading leading into FOMC, guys, okay? Okay, let's do gold, okay? Is anybody trading right now? Are you guys in anything? No, I'm not in anything either. Okay, guys, so gold. Should we do gold? Do you guys want gold? Do you want to stick with indices? Do you want me to do gold? We got time. I got a lot of time, guys. A gold moves too with FOMC. Okay. Yeah, all good. Let's do it. Okay, gold, man, it's been on a tear lately, okay? Higher highs, higher lows, higher highs, higher lows, higher highs, but now they pulled it down and we're concentrating in this area, okay? Let's look at RSI. We were overbought. They cooled it off a little bit. That doesn't mean that it's going to drop. It could come right back in overbought situation and they could take it, continue to take it high, okay? So just, I've seen gold 3-6 months in an overbought area for a long time back in the day, and it was just destroying retail traders, okay, that were trying to short it, and they just held it up there. So just because something is overbought doesn't mean it's going to come down. It's in an area of strength. That's where if they keep pushing it, they're going to cause a big short squeeze in the market. So let's find our high and low of today's candle. Okay, and you see we're playing with a lot of wicks inside this area, okay? So every time it comes down, it's going back up, coming down, going back up, coming down, going back up, coming down, went up, coming down, went up. Now they broke it yesterday. They came down, they pushed it, they claimed a new low, but when it came down to 1900, that psychological area, it was bought right back up. So it's claimed a low, so they could come down possibly and fill back down to 1900 and drop it. That could potentially happen, but we could also go back to 1950, that psychological level. So you see how we're trading in between these psychological levels, 1950, 1900. I tell you guys, this is how gold trades, quarter increment moves, 1900, 1925, 1950, 1975, 2000. So that, let's draw a big daily supply box at 1950. And let's draw a big demand box at 1900 level. Okay, capture this. All that, bring it, okay? So we know that maybe if it comes down here, there could be buyers pending orders waiting to grab this, okay? So we're kind of concentrated right in between. High and low of today. Gold's high, 1933. Gold's low, 1920, okay? So $13 range, 130 pip move right now, okay? And inside purple, do we have any critical levels? Okay, I see a wick and these two bodies that held. I'm going to draw a yellow line right here, guys, okay? No, I don't want my horizontal rate. I want a yellow line. 1 second. Okay, so a yellow line to try and cut things in half, where if we hold above like 1926, we're holding nice still daily support volume. Okay. If we break above here, where could we go? Okay, we got those two little wicks right there at 1935. But with news, we're going to possibly push a little further. Maybe I would like to look at this critical area. Wick got rejected, body. 1937. Then maybe we start to trickle up to 1942, this wick. And then 1950 is our psychological supply. If we go above here, when was the last time we were above here? Look over here. Okay, so if we break 1957, last time we were here was April, okay, April of 2022. Right up here. This is a critical level. See how they shut it down here? They shut it down there again. Yeah, Russia news. Yeah, the war started February 24, leading into March, April. That's when gold was up here, and that's when they started to drop it down, when everything started in Ukraine and Russia. If we continue to move up, guys, look at these two like tweezer wicks up here and bodies, 1966 level. This is not just for FOMC, guys. This is also for going forward in February, in March. You know, these are levels where we may continue to come up to. That's good enough, guys. 1973. I can continue to go up to here, 1980. We can go up 1988. We can go up 2000, right up there. But I don't think FOMC is going to shoot up to 2000 today. So we got to kind of focus in this area. And then downside momentum also. Okay, if we push back down, we break here, we break our low of the day, what could save the market? Right here. Okay, these bodies, and then, yeah, these two wicks don't touch, but very, very close, okay? So that's one area, and then one more yellow line I would place is like right here. Then if we lose 1915, we're coming back down to 1900 in this big pool right here. Okay, now let's go to hourly. Okay, wow. Okay, so see over here, the big drop came all the way down, held in this big pool, 1900 level. We came, got that volume, and we're right back in here. What if, guys, this is a huge inverted head and shoulder pattern on the hourly? All of this garbage, left shoulder, there's the inverted head, the liquidity grab to the low, and we're trading again in the right shoulder. If they pump it out of here, that could be the big move, guys, okay? But they could come up here and fake us out and come up and then bring it back down, close it below here, and they drop this shit back down. Okay. And that's kind of like a head and shoulder pattern. So we have to be aware of what these guys can do. Okay. Again, if you're speculating, feeler trades, this is when you use feeler trades in news like this. Go penny lot sizes, guys. Who cares? If you go 30, 50 pips and draw down, you're down $3, $5. Don't do huge sizes on this big, because then you could be down $300, $500, or $3,000. So if you want to speculate, go a little feeler, test the water. Okay, don't do anything crazy unless it's building up nicely. Okay, so let's see now where we have some hourly resistance in the market for gold. Right here. See when they impulse breakout, but see the bodies hold below. See the bodies hold below. Bodies hold below. So I don't want a yellow line there. 1930. You see, psychological, guys. Numbers line up perfectly with price action. That's why anyone tells you indicators are good, this, that. No way. Price action is the best. Okay, but you can add indicators to complement your trading. Okay, but learn price action, guys. It will help you guys so much. Where do we have like hourly support in the market? Right over here. See that our wicks today coming down here. It held 1923. Held here, held here, held here. They just broke it below there at noon, but it came right back up. So maybe they gobbled that liquidity down there and coming trading through here, okay? So we're still barcoding green, green, red, green, could go down red. Let's go down to the 5 minutes. This is what we got on gold now. Okay, so key levels. Yes, we could scalp this from hourly up to there, okay? But the bigger move is, look at where we got rejected. 3 times right there, rejected right there, rejected right there. So let's bring our lower supply down to here, just to give us a heads up, okay? If anything, if we break above here, this could be like new highs. Oop. Okay, new highs up here. And then we take it maybe up to that daily, maybe to the next daily. And there's your upper 1950, 1947 supply area. Again, to the left of the chart. Look, I have like not much going on here. Here, see these 3 wicks? So scalping, we could come up to here, here, here. See, 3 times it came up to 1935, got rejected. Came up here, got rejected. Came up here, got rejected. But now we're coming up with more supply, more demand, more volume. So if we come up here, we could possibly break that and go to the upside, okay? And then when we go yellow to yellow tape, look at all the 5-minute action in between. So just like I did with NASDAQ and US 30, find your pivots, right? Here's a pivot, 1940, nice area. Okay, and continue to go up. And there's your supply area. So if you want to have levels in here before you hit that big supply. Okay, so let's go back to the 5s. But some traders want to scalp this move. Okay, they want to trade from here to there. Okay, that's it could break out of here to there. Guys, that's 25, 30 pips coming up to the supply area. If that's what we want to do, okay, what we need to do now is kind of focus on this here. When we close below this hourly, see the 5-minute volume is still below here. So that is still an acting supply right here. Okay. If we want to scalp this move, we can. Okay. But what we're looking for is volume to kind of close above here, or maybe like even an impulse breakout up to there, and then catch yourself 20, 30 pips. But that might have to be a quick pip and dip and no screwing around, because you got supply here and a bigger supply up here. But that could be just filling that imbalance like it did over here, where that candle broke out, grab your 20, 30 pips and get out of the way, because it could drop down. Okay. And then let's draw that nice little trend line. Okay. So we are ascending currently. It's making higher lows off the bottom. If we're looking for a sell, we could look for a sell below here. We could look for a sell below the hourly. We could look for a sell below the trend line break and the daily, like right here, depending how like aggressive you are as a trader. And if it fills down to there, you could grab those pips and dip. If it comes down here, we're coming back down to basically the low of the day where it held. So what I do is have a big green box in here to give you a heads up that this is a daily, that's where they held the market when it came down right over here at noon, and they picked it up. So does that make sense, guys? Okay. And then if you're scalping from here to here, this is just zone to zone trading. Okay. You don't have to always do this for FOMC. This is how I normally trade. So this is a 25 pip move. If it breaks down there, you're looking at 43 pips. Okay. I'm not looking for 500 pips. I'm looking to fill that zone. Okay. And then inside here, I don't want to trade this shit. Okay. Because this is where it could get real choppy inside here. So maybe we just trap it. Okay. And we look for something. Some traders are looking for something above here. I want to give something for everybody. You know what I mean? Some traders are more patient. They want to wait for the bigger break up there. Some traders like to scalp inside here. Some traders like this. If you're looking for the bigger sell, then what you do is you look below here, look below 1920. That's what you're looking for. You're looking for a break of big structure and retest and continue to drop the market down. But some scalpers are looking for a move here. And sometimes, guys, it can be very, very fast. Like it could be 2 o'clock and all of a sudden it just, a big red candle just drops like that. Okay. That's happened. You know, sometimes you'll get it. Sometimes you don't. Some traders are trading with pending orders, waiting to get triggered and go down. But with FOMC spreads, slippage, you could get triggered. What happens if it's a big red candle comes down, triggers you, and then all of a sudden it gets a wick and it goes up and then it's like this and you're at a massive loss. So if you're using pending orders, there's pros and there's cons. We're using it. I don't use them. I trade market executions, guys. I hit my buy and sell button myself, but everybody does their own thing. Okay. So 145, appreciate it. Thank you. Okay, guys. Are we all good? Guys, if you got any questions about the charts, you know, ask me something. We have 15 more minutes. You can raise your hand if it's got to do with the charts. Or anything. Are we all good? See how we came up here, US 30, getting rejected. We came up with NASDAQ right up to that supply. It's getting rejected. Guys, I will give you guys these charts too. Okay, just one moment. Okay, so in the Zoom chat, there is a TradingView link. It's provided for all of these. It's 1:45, guys. Okay, so this is a new 15-minute candle coming in the market. And also some scalpers are looking for this move right there too. To take that, even if it's like a green impulse candle that comes, you might get 20, 30 pips filled. But you have to be careful, because what happens if it comes up and like right up there and gets faked out? So you got to know your levels that you're trading and understand which are the bigger levels, what you're looking for. So again, some traders are looking for the bigger move up there. Some are looking for inside here. Let's just draw our current trend, what we have going on right here. Ayush, can you please explain what should I prefer, retest or ignited candle? I missed 4 trades today waiting for retest. I always recommend you wait for a retest. Okay, if you're trading impulse, you got to know that the trade might go impulsively 10, 15 pips. You don't secure it, get a wick and come back down, close below. So always what I recommend is wait for a candle to prove to you, close above, give you the retest. If you miss a move, who gives a shit? You miss the move. You'll wait for another move. That's the way how you got to train your mind. Okay, don't get caught up if you miss 4 trades. Who cares? You'll get 4 trades tomorrow. But if you get now all caught up, it's going to affect your future trading. You got to, like I say, you got to trade like a robot, guys. I don't trade with woulda, shoulda, couldas. I could have done that. I would have done that. No, it's trading live. You got to know what you're doing right now. So you're either, the way it's building, you're going to take an impulse candle, but you got to understand the consequences of what can happen with that. If not, you're going to wait for volume to close and give you a retest. You got to set your mind, trade the plan accordingly before you even get into a trade. Everybody's different, guys. If you're unsure, what I recommend is you always wait for a break, retest, confirmation. Sure, you believe there's going to be whiplash? I believe so. It could be. Okay. So what whiplash means, or whips in the market, means we might open up and come up, big green candle, go back down, come up, and then, it's a big range candles. Okay. If that's the case, we're going to sit back and we're going to wait. Okay. We don't want to trade that. So we're going to try and be patient, for even if we have to wait for the first 5, 10, 15 minutes, we'll see how it moves, guys. But just please understand that the range is going to open up. Okay. They're not going to be like 20 pip candles. Some candles go 100 points. Okay. They're big because it's a flood of volume. Like the market's waiting to redistribute this volume all day. Okay, guys. Do you guys want me to turn the music off when we get started? Because I really want to be focused when we're doing this. If it's bothering anybody, or just let me know the truth, honestly, okay? Because music is fun in like London session or workshops, but this is FOMC, guys. I don't want to play games here. I really want everyone to be focused. I want you guys to hear me. Okay, so no problem, guys. I'll turn it down 5 minutes before, no music, okay? So we can be focused. And oh, you can't even tell I had music on? Yeah, there's a little bit of beats in the background, but we got to be focused, guys. This is FOMC, okay? And please, guys, listen to what I'm saying. Let's not blow up accounts, okay? How many times do we got to go over this shit every single call, okay? Please, guys, stop that. You're not going to learn anything by over leveraging your accounts. You're trying to hit a lotto ticket. You're trying to go all in and push all your chips in on one move. And you don't want to do it with FOMC. This is not the time to be pulling all your chips in. People want to get rich quickly, but yeah, I tried it when I was younger. I tried to get rich quick. You know what happened to me? I got broke real fast. I was trying to get rich quick, but I got broke real fast. That's what that happened. So I don't want anyone to go through that. I've been through that. It was not a good situation. So guys, let's trade smart. Let's learn how to trade now. Okay. if you're younger, okay, you're in your 20s, you're not married, you don't have kids, maybe you're living still with your parents, yeah, you can risk a little bit more. But when you're in your 30s, 40s, 50s, you got family, you got kids to support. You can't be putting that risk on yourself. You know, you got now mouths to feed. You got bills now. You can't trade like that. If I went back again, knowing what I know now, and I was 20 starting again, oh hell yeah, I would start with a $300,000 MFF account, and I would be going Lambos, be waiting for setups all day. Grabbing 10, 15, 30 pips out of the market and just dipping. If I knew what I know now and I was 20 again. So if there's anyone in the group and you guys are in your young 20s, you guys use the knowledge from this group. There's a lot, not just myself. There's guys in here that have more experience than me. There's someone in this group that has been trading 40 years, 50 years in this group. You know, they're my mentors in the group. I have one-on-ones with them. They're teaching me things that I didn't even know. You know, they were born before me. They're teaching me concepts and things like that. And I really appreciate them in the group. So I learn daily from everybody here. So everybody can drop some knowledge, you know, just everybody, we work together here as a community. No, Shane, you can't blow the diapers and milk money. Hell no. No way. Okay, guys, so I'm gonna turn the music off. We're gonna get focused. Okay, guys. So again, let's go over while we have some time. FOMC, guys, okay? So this is what's coming in the market, 2 p.m., okay? So 2 p.m., this is just when they release the number. Then we're gonna get some crazy movements in the market. And then 2:30, another 30-minute candle in the market, but it's a very volatile candle because this is the actual press conference. This is when Jay Powell and all of our friends get together and they discuss what is going on in the market. If you want to listen to that, there is websites you can go to. If someone wants to drop the link in the chat, you can listen to what's going on. And if you want to hear what they're saying, but we'll be watching liquidity moving. Also, guys, I do have Bookmap, okay? So, but Bookmap, it gets crazy with FOMC NFPs. I can flip to it, but it's going to be moving very, very, very fast, okay? But what I have is, I got some ranges that I've been focusing all day. You see, this is a spoof. I think you see here how they're already setting up 104 offers right above the VWAP. You see this? Like, look how thin it is up here. And then we're 104 looks suspicious here. So they could bait you in to come up here, then they'll pull it and then they just release it. So that's called a spoof in the market. This could just be a market player trying to bully the market, showing that he's showing a lot of offers in the market. And then when it comes up here, what they do is it's a pending order. He can just pull it and then it just breaks and goes to the upside. So you got to be careful. This white line is the VWAP, volume weighted average price that I follow. It's kind of like an institutional magnet. They want to come here and liquidate positions in here. That's why we do have this big offer above us. But things are going to start to populate when the market opens up 2 p.m. Okay, so if you want me to flip flop back in Bookmap, I can, but sometimes it's so fast. Like there's bubbles up here, down here, down here. You know, so it's very, very, very fast. Okay. Yes, David, trade your demo as if it's alive. That's the best thing. That will save you so much headaches in the future. You can learn good habits. If you trade it, just open up a demo and you open up $100,000 account, you're not going to trade with 100,000 and you're doing Lambo lots and you're not going to trade Lambo lots with your real account. Don't learn that, okay? You're just going to learn bad habits and it's going to really hinder your actual trading. So treat everything as if it's real. If you guys are trading with demo, treat it as if it's a real. If you guys are trading with penny lot sizes, trade like it's real, okay? And guys, scaling in too, okay? There's times and place when you add another larger order, but with more confirmation and things like that. But remember, this could be very volatile. Like if you were trading with Dave in the morning, New York, Wall Street, it could be chopped like that too. So this is just another session. It's FOMC, you know, it's got a lot of hype, but we have to trade smart. This is where 95% of traders lose a lot of money. What are our predictions as a team? What do we think? And when I say it, I'm going to talk about US 30. What do we think, guys? Do we think we're going to break to the upside? Do you guys think we're going to break to the downside? Think it's just going to range inside here and grab liquidity and we wait for 230 move? What do you guys think? Upside, pump and dump the Dow, bullish. Some of you guys are all bullish. Okay, so we got 5 more minutes to go, guys. And remember, if it is too fast for you, market open, don't trade it, okay? You know, sometimes, guys, it's just a big candle. You don't even have time to react, okay? That doesn't mean that you got to jump in and buy the highs because it might grab a wick up there and come right back down. We might have to wait 5 minutes. There was one FOMC, I think we waited for 15, 20, 30 minutes before we even took our first trade. So, you know, we take it how it comes to us, but just trade smart, okay? Yeah, Nigel, you killed your FTMO on the last FOMC. That's what I mean. If it happens, okay? We got gold breaking down, okay? But it just could come down, go right back up. Remember, it could trade in this box in here. So these kind of like consolidated ranges. I don't want to trade inside here. So let's consolidate NASDAQ in here too. And guys, if I'm talking fast when the markets open up, it's just because it's fast moving. Okay, so I try my best. Deep breathing, everybody. Yes. If somebody wants to do yoga, whatever you guys got to do for the next 2-3 minutes, if you guys smoke a joint, you know, light it up, whatever you got to do. Just keep the nerves down. Okay, it's just another session. Okay, but let's navigate it properly. Okay, don't get caught. Well, if we do get caught in, and remember, guys, you got to increase your stop loss too. If you're trading with a very, very tight stop loss, if you hit a trade and you have zero drawdown, it's great. But you got to understand that these candles are going to range. So you might have to open up your stop loss now. So now you got to adjust your lot sizing. Okay, so that's another thing. If you were trading earlier, like the London session, you know, London was very tight, very consolidated. You could trade with a tighter stop loss. Here, things are going to open up, guys. So you have to really adjust your stop loss in here. So if you're increasing your stop loss, you got to decrease your lot size so you still have the same risk. Okay, guys, and I'm going to go till 3:05, and then unfortunately, I got to go pick up my kids at school. If you guys are going to trade going into power hour, just be focused on that move as well. That's another powerful session of the day. That's the close of the markets. Okay. So far it's building. Okay. It's making a higher high, higher low, higher high, higher low. So they could spike it up and then come right back down. If they spike it up and we close above here, maybe we're going to push for some new highs. Okay. So we have 1 minute and 30 seconds, guys, 90 seconds away. Okay. So everybody, let's have a great session. Unfortunately, there's going to be some winners. There's going to be some losers in here. But everybody, please practice proper risk management so you can help avoid that, you know. And if you get stopped out, a stop loss shows maturity, okay? We're not just going to trade and hope for the best and pray. And if you go in 100, 200, 300 pip drawdown and you're nursing a trade now for days and days and days, you could have been stopped out at 30 pips and avoided that. So I take losses. Everybody takes losses, okay? So there's no trader out here that's going to be 100% perfect, and we all take losses, guys. But what separates other traders is controlling losses, okay? Here we go, guys. So this is kind of like the pre-FOMC move, and this is US 30, NASDAQ, and gold. You choose which security you're comfortable with and you trade. I'll be looking more focused on US 30, but I love to trade gold as well. So everybody, you do your security. Here we go, guys, 30 seconds, okay? And please, guys, don't over leverage, okay? Okay, they could be faking a spike to the high, bring it back down, maybe grab liquidity down here. Okay, so see how it's getting rejected right now. Okay, so 10 seconds. It came up in that supply, came up here and got rejected. Okay. Here we go, guys. Okay, dropping. Okay, let's see if they pick up a wick. Okay, they picked up a wick. Guys, I'm watching Bookmap. I'm telling you guys. Okay, they picked up a wick, coming back down with volume. Okay, still got a wick down here. Let's be careful. Okay, if you're not in a trade, let it build. Let it build. Okay, it's coming back down. It's coming back down to break the wick. Okay, we're below the VWAP. Okay, gold broke. US 30 and NASDAQ are testing this previous demand, and now it's coming down breaking, okay? That was just the first 30 seconds, guys. That's just 30 seconds. If you're not in a trade, hold off, okay? Let's see if they come down there and pick up that liquidity. Okay, they did. Let's see now if they're gonna break it back to the upside, okay? Just be patient, guys. Gold went exactly, if you got in gold, it came down to that exact 1920. Now we're coming right back down, guys. We're coming right back down. Okay, let's see if volume can close below here. If not, we know that they're coming demand. They're picking up some good bids. They might be getting ready to break it to the upside. Now look at the candle turn into a pin bar. Okay, we're possibly going to break to the upside, but let's let it break, guys, because what they could do is fool you. Now it's building. Nice hammer. Okay, get ready for a possible breakout, but let's see if it can break the high. Okay, remember, like tweezers are highs. It didn't break there yet. So it's coming back down. Same, just treat it like as if it's another session. Look at gold, grabbed all of that liquidity down there. Okay, so still rejected, lower high. Don't take a trade yet, guys. Okay, listen to me. Okay, let it build, let it build. Even if we got to wait 5 minutes, who gives a shit? We got to wait. How's everybody doing? Hearts beating? Are we all good? Okay. Stay calm. Puff that joint. Smoke that shit. Okay. Breathe. Patience, guys. Okay. This is like if you want to speculate a feeler. This is what the feeler does. It's your little soldier in here figuring out what's going on. I haven't even used the feeler. I'm just watching myself. I'm just watching. This is not volume I want to trade. You're kind of just hoping for the best. And you got to basically get in and get out real quick. But this is not trading, guys. Okay. Let the market do what it wants to do. Okay. Now we're coming back down. Remember, let's see what they do with this volume. Where are they closing it? Is it going to close near the low, close in the middle, indecision, close near the high? Okay. It's been up and down, up and down. Now we're coming back down. Okay, so we're going to test that low again. Okay, so this is now interesting. So now if they close it below here and push down, now we might get maybe a nice little retest candle and then a push down to the low. But let's wait for it, guys. Let's not get caught on impulse. Okay, that's what they're trying to do, guys. The market makers know how we trade. Okay, if I was a market maker, I know exactly how I trade. I would be like, I know how I trade. Okay, I get bit on those impulse candles because I see it coming back down and I want to enter, and then they get my money and then they bring it right back up. I get stopped out, then they bring it back down. I get pissed off. I'll take another revenge trade. Then they bring it back up. And before you know it, I'm at 2 losses and I don't even need to be trading this candle in the first place. Okay, so let's just relax, guys. 1 more minute to go. Okay, so but let's analyze what happened. They broke it to the low. They broke a lower low. They came up here. It was a lower high, couldn't break for a new high, and then we're coming right back down. So let's see if the volume closes below here. Identify 50% of the volume too. So like this area right here that used to be supply, maybe that's going to be 50% level. We're at the daily level. See, there's still yellow line here. So that's why I have that yellow line inside. Okay. Let's see where they close it. Above the daily, below. Are we coming back up? 45 seconds. Okay, guys. Trade 99% of trading is being patient. Okay. If we missed a move, who cares? Who cares? How many times were we going to get stopped out of this candle? Possibly all of us, unless you got in and you pipped and dipped real quick. 4.75 PK. Okay, So, that's why there's some indecision up and down. So it's the rate that we all expected. So now we might just move with the normal flow of the market. Okay. What were we building? We were building a little bit to the highs, a little bit. Maybe we'll come back up. Maybe they push it down now. Okay. So that's the close. We can't trade that right now. Let's see what they do with this candle. Okay. So it opened right at the trend line, got a nice bullish engulfing candle coming 50% of the volume, rejected. Okay. Just like any other setup, rejected trend line, rejected below the daily. Same shit, guys. Gold closed below. Okay. So look for gold to maybe retest. If it continues to break, gold might break a low and come back down in here. But right now, see how it's holding the hourly. Okay. So we got big rejection right there, 50% daily rejection. So just, it's inside here. We don't want to trade this trap zone. Let's wait. Guys, Bookmap is just accumulating. Bookmap is just accumulating, but we're still below the VWAP, but we pierced it 2 times. Okay, so if we get volume above the VWAP, we might be going to the upside. Okay, so let's get ready, guys. Could be building it for upside move. But remember, we need a new higher high. Okay, if we don't get that new higher high spike, this is lower high, lower high, lower high. There's still offers holding it down. Be patient, guys. Maybe we might not even get a trade, like that's, there's nothing to trade in here, guys. So I know a lot of us will have ants in our pants and we want to trade, but just sit on your fingers. Okay, so gold retested. It's just a spin top candle in here. Let's wait. But we're still building, okay? So we're building good support off of this body. So the bids are still holding the move. Okay, maybe if we get a nice break above here, we could look for something. And then this helps me identify where my stop loss is too. So like if I'm gonna buy up here, I can see where a lot of bids are holding down here. If this pattern holds, then that's kind of like where I place my stop loss below these bodies, because I can see buyers are holding that. I want to be part of their volume. I want their support. Okay, so now we got a nice bullish engulfing candle coming up. Same with NASDAQ. Guys, we're creeping up to the VWAP. We're going to tap it right now. Okay, the VWAP you see is our supply zone. Okay, but let's see. Let's get that higher high. Prove to us that they can break it. Okay, not this bullshit where it's coming up and then catch a wick and go down. Let's see if they can break the higher high, okay? And this is where you might want to take a trade. Like this is where the buildup is, but it could build up and then come right back down. So 2 more minutes to go. If you don't feel comfortable trading this, then let's wait for this candle to close. This is an impulse candle breaking out. But for some traders, pipping and dipping, that'll get you your 20 pips right up there, okay? But yeah, guys, we're breaking, okay? Right up to the supply. That's what I mean. That's a nice little zone fill. 20, 30 pips in and out. Okay, and now we watch the close of the candle. Okay, if you didn't get it, let's wait for the close. Okay, so you see how we came back right up to the supply, but it did make a new higher high. See that 5-minute red line I put there? That's what we just tapped. Okay, that's why I use these red lines, guys. I don't use these to make my chart look colorful and pretty. I know exactly where it's going to go. Okay, so we're still pushing. Let's see 90 seconds. 230, 245 is the real move. Yep, it's going to come. But right now, we can see some moves that they're pulling right now. Okay, we're going to the upside. We're continuing to push, guys. Okay, so it's breaking. Okay. Okay, did anybody take this buy? Anybody in here? Okay, so not bad buy, not bad. See how we let it build? And then that's why we fill that imbalance. We're not looking for 300 pips, but 30 pips, okay? In and out. Okay, guys, we got a big wick, big rejection, okay? So that's why identified areas. Identify your areas. That's why trade like a robot, okay? And the woulda, shoulda, couldas, who gives a shit, okay? If you secured money up there, good. Because if you don't, it might catch a wick and come back down. But if you're still holding, you got your stop loss placed maybe 50% of this body down here, and you're letting the candle build. 30 seconds, let's watch the close. Okay, gold too, if you're watching gold, it's coming back up. Let's watch if gold can break above here as well. Yeah, NAS looks like a better move, but things will open up, guys. Okay, and then retracements. Now I flip the zone. Okay, remember this box, red, I flip it to green. Okay, because this might be demand going forward. This is still supply. Okay, okay, here's the close. Okay, retest. Let's see. Okay, so red, we assume it's going to be red, maybe a pullback. Okay, let's see if this continues to break out. This could be a big candle, guys. Okay, continuing to possibly push buys. Yep, we're coming right back for a potential higher high break. Yep, NASDAQ looks good. US 30 looks good. Okay, so let's see if we can pierce out of here. Let's see the daily yellow line. That's what we're trying to break, a new daily level. Okay, if we can get out there, we could possibly fill some nice imbalance. Okay, and if it goes up here, we've got nice volume below us. We're holding the demand zone. We're looking to possibly break this daily and the supply area. Okay, but two tweezer rejections, so we might come back down. Okay, so let's wait, guys. Let's wait here. Okay, these are just little zone fills. Let's see if the volume builds again on the candle, holds this area. If it pulls back, we're looking to about 50% pullback, like right here where my cursor is. Okay, is everyone still okay? Everyone doing good? Okay, I'm trying to read Bookmap as well, answer your questions. But we're still building. We're still building. Guys, get ready for now a possible break. Okay, we're coming right back up. We're above the VWAP. We've touched it twice now and got support of the VWAP, but we're in a very, very tight range right now. And we're leading into a new 15-minute candle. Okay, remember, in 3 minutes, we got a new 15-minute candle coming in the market. So this is going to bring in volatility as well. Okay, so be careful now if you're trading, because it could be a red 15-minute candle that comes down. Okay, you guys know we've been teaching you guys this over and over and over. Okay, so maybe we need to wait for volume to close above here and volume to close above the yellow line to continue this NASDAQ and US 30 move. We could wait for volume to close above here for gold's continuation to the upside. Okay, but still has not broke any stop loss, still holding here, still holding here. So now we're coming right back to the high. Okay, and this is where we could get that nice push if we can break out of here, guys. Okay, it's there, like it wants to go, but not yet. 200 is above us. Okay, let's add a 200. There's the 200. Okay, so we got the 200 above us. Okay, so we got 200 and we got supply. So maybe we have to wait next 15 minutes to get volume to close above there and get above the 200. Otherwise, it could just retrace right back down. Okay. Also, I had the 9 EMA, if you guys follow that. So we're above the 9 and there's the 200. So we're trading in between the 9 and the 200 right now. Okay, I can show you guys Bookmap, what I'm seeing right now. Okay. Okay, you guys see Bookmap? We're at this area, that resistance. There's the VWAP. See how we're trading inside here? We're trying to get the accumulation in here, and we're trying to hit up here. That's what we're trying to break. We're not there yet. Okay, so they're possibly going to pull the market back down. Here's the new 15-minute candle right here. Okay, so we're coming right back down to the VWAP. We've got bids below us, but new volatility could come in and break this. But we got support right here, and we're looking for support right here. Okay, so let's go back to trading view and focus here. Yeah, the market could be waiting for Powell to talk. So 230 could be another move, but 215 is going to bring in that volatility as well, guys. 0.25% rate increase. So everybody expected a 0.25%. They didn't really change anything. So that's why I said there was a little bit of indecision, but we could flow with the original direction as the market. Like pretend FOMC didn't even happen right now. But Powell speaking, he's going to pivot. Okay, his words are going to change the market. Okay, because his forward guidance. What happens if he says in the next one, we're going to decrease rate hikes, and then that's a big, like if he says that, that's going to affect the markets. What happens if he says we're going to continue to be hawkish, or we're going to continue to increase interest rates in March? If he hints or something like that. But he also gives guidance of how inflation is doing and if they're controlling it and things like that. So let's just patience, discipline. That's all that move was, okay? Just a little bit of pipping and dipping, but no big aggressive moves yet. Okay, so we're closing now. Rejected 2 times, rejected at the daily. Now, let's see if we retest and hold this area, or it's going to come back down into this box in here. Okay, so here's a new 15-minute candle, guys. If you got that joint, smoke it right now. Okay, stay calm, collective, breathe. Okay, we don't want to trade this stuff. No trader wants to trade this. Okay, how do you want to trade this? Okay, so if there's no move, there's no move, guys. There's going to be power hour. There's going to be London tomorrow. There's going to be New York tomorrow, post New York workshops. Okay, don't worry. Okay, you don't have to go all in just because it's FOMC. Sometimes if there is no move, there's no move in trading. You got to learn this, guys. If you want to do this day in and day out, you got to learn this patience. You know how many retail traders probably blew up their accounts with that first red candle that went down there? They sold, they went in hard. You know, pending orders, you know, if you have your stop right there, you got triggered and then look what they did to you. They popped your account, okay? That's why I don't use limit orders in the markets, guys. You got to know the market makers can see all that shit. Like how I can see on Bookmap, I can see offers coming in. Okay, so we're starting to build a little bit. We're starting to build a little bit. Okay, we're holding that VWAP. We're touching it like right now. Bookmap is right on it. 3 touches still there. So let's see if they can still accumulate here. Okay, maybe we're gonna get a move coming, but let's let the volume accumulate above the VWAP. Right now it's just touching. I can go back to it because now we're retracing right back down. Show you guys what I'm looking at. Okay, so see what I was showing you? How can we trade this? Guys, it's now, see the VWAP? It's breaking below. But when they break it below, we've got nice bids below us. Let's see if they come down, pick up these bids, and then turn it back up. Okay, it could be a proper retracement, 50%. Okay, we're coming down to the 9 EMA. If you follow the 9, we just kiss the 9 EMA. Catch a wick. Let's see if we can go back above the VWAP. Okay, we want bullish momentum. We know now where's our resistance, our supply, okay? But they're bringing it down. Here's our new candle coming in the market, okay? See how they're dropping it now? So don't get caught. Here's the market coming down. Let's see. Let's go back to trading view. We're right back in the consolidated area, okay? So we got rejected. So they broke it out impulsively to the daily high. They broke it up to the previous supply, and they're bringing the market down, okay? So that's why I have these targets, guys. You know, if you get in the trade, you got to use these levels, and you got to think about taking some profit, taking a little bit, leaving the rest with a break even, because there's no new higher highs. So we got to retrace back down to that level, that red line. Let's see if it holds here. If not, might be a bearish engulfing candle coming down here. And then the market might be getting ready for Powell when he speaks to really break down. How are we doing, guys? Everybody okay? This is not a crazy FOMC session. It's not that. There's like, do you guys understand why I haven't taken a trade yet? There's nothing really quality to look for, you know. Guys, you know me, I'm very aggressive, okay, but I'm actually being very patient right now. There's no good setup yet. Let's let the market move how it's going to move. I want you guys to learn. If there's no trade, there's no trade. Sometimes I don't even take a trade. Carlos, my man, I'll talk to you all day. But guys, like for real, that was just a nice little break, impulse move coming up there. That's pip and dip, guys. I swear. I told my wife, I'm going to get this tattooed on my forehead for you guys. She said, if I do that, I will be divorced, guys. So I'm not going to do that for you guys, but, so please, guys, I love you guys, but I don't want to ruin my marriage. So, I will not be doing that. Because that's going to cost me a lot of money. then my wife will be pipping and dipping out of here. She's not here, so I can say that, guys. Let's keep that between us. Yeah, it's cheaper to keep her. I hear you. So I guess I'll keep her. Okay, guys. So we're still, look at now, we came down, held the trend line. We came down, we held this area. Let's see if they continue to bring it up. Okay. Bookmap is just, we're picking up bids, we're picking up offers. Nothing really going on in the market. Okay. But we got few rejections. Maybe we'll see what's building, guys. Okay. Remember 230. The market could be waiting for 230. The market could be waiting for Powell. Okay. Uncle Powell. I'm Uncle Ronnie, but Uncle and Grandpa Powell, he's above me. Okay. So I listen to Grandpa Powell. He is the market maker. He is the mover. He controls the Fed. So is anybody listening to the channel where he is? If somebody wants to drop it in the chat, if you have it. Okay, so gold, okay, we came up, didn't break this area. I'm looking for buys up there. Nothing. Okay. So if we get more volume closing below here, more retest, we might see gold drop back down to 1920 and possibly 1915 if they break. We're getting NASDAQ coming right back into this demand area. Okay. So you see it's building a little bit. It came up, came back down. Maybe we're making a neckline. Maybe we're going to come back up and get a double top and then come back down hard. Okay. So we got a nice bullish candle forming again on NASDAQ above the demand area. Let's let it build a little more. I want to see at least the volume get above the VWAP. We're still right below it. Okay. So I know they're playing games right now. Okay. Let's go to Bookmap. I want to show you. Okay. You guys know I'm looking at this VWAP. Okay. We broke below it. We came down, but now we're coming right back to test it. Okay. If we continue to get rejected, then we're going to come back down. Okay. If we can get above here and we use the VWAP as support, then we're going to maybe possibly break this high and we're going to go. Okay. Do you guys have any questions? Okay. While it's still calm in the market, it's not crazy. Any questions? Hopefully everyone is still doing okay. I see some of you guys have pipped, you dipped. Wow. And Keith, you scalped $7.35 on a $20 account. Holy shit, man. That's, that's big, man. Brian, you sold from supply US 30, got 78 pips on a demo. Okay, good. But you're learning how to do that. That's good. Okay, so they're moving a little different. Okay, you can see NASDAQ is moving a little bit different than Dow. We have 2.5 minutes to go on this candle. Okay, and if you want to look at 15-minute candles, let's look at 15. We got nothing going on the 15. Okay, just a impulse break. We came down, volume right here. NASDAQ looks a little different on the 15-minute candle. We closed, we came back down. Now we got a nice pin bar. If we close maybe 15-minute when Powell speaks, we might get upside momentum. Okay, gold came all the way down, closed right here, but bearish candle came down. Let's see if gold can close back and maybe we get that push. If not, we're going to go down. We're going to continue to go down on gold. Okay, so let's just go back to the 5s. Are any of you guys in trades with like a little feeler, see what's going on? Or you guys, I still have not taken a feeler. I haven't even taken a trade, guys. Okay, I'm very transparent with you guys. I'm honest with you guys. I haven't taken anything. I don't see anything worthwhile. The only thing that I maybe would have taken was that impulse break for 10, 15, 20 pips, like right there. And I would have been out, but I didn't even do that. Okay. Didn't even risk it with this session. Okay, so it came up again, rejected, lower high. Maybe they're going to bring it back down. So the market is waiting for Powell. Okay, it's just accumulating. We're not in a crazy range. This is just like any other 2 p.m. open. Okay, we open, we come back down. So let's forget about if it's FOMC. Take that out of the equation. This could just be like a regular 2 p.m. open. We came up here, we tested the supply. We're coming right back down. We're right back in the consolidated box. Okay, so just look at it like that psychologically. Forget about FOMC. What if this was just a normal 2 p.m. move? Okay, this is standard, nothing crazy. But Powell speaking at 2:30 in 5 more minutes, that is going to maybe cause a move. So we got to be ready, guys. Okay, 5 more minutes. What do you guys think? Okay, we kind of said, what do you guys think on open? What do you guys think with Powell? Okay, we already know it's a 0.25% increase Fed rate. We expected that, so that could have been baked in already, the move. But now he's going to talk a little bit going forward guidance and things like that. YouTube chat is spamming sell. Hopefully they got it, but let's see. You know, they got to provide more analysis. Why? Okay. But maybe like a head and shoulder pattern, left shoulder, the head that broke out. Maybe we come back right shoulder and drop. Okay. We got an M pattern forming on gold, closing with volume below, might push further down. Gold looks like it's moving. Okay. Yeah, could be tomorrow, guys. You know, for all we know is maybe nothing big right now. And in the Asian London session, maybe then they redistribute the volume. And then also tomorrow, guys, remember, we got earnings, Apple, Amazon, some big earnings. We got Jolt's job openings. And then we got Friday NFP. This week is a crazy, crazy, crazy week. Maybe they wait till next week to redistribute the volume. Maybe they want to accumulate more on NFP. Okay. They don't have to move the markets every day. They can accumulate for weeks and then redistribute this when you don't even think about it. Meta earnings tomorrow, yeah, or today. Today, yeah, Meta, yeah. After hours, 405, Brian, CL. Okay, so let me show you guys Bookmap, okay, because I want to show you guys what I'm looking at as well on my other screen. Okay, so I'm looking at this. You guys see the volume is very concentrated at this level, this yellow line that used to be support. There's our VWAP. So it's just accumulating, guys. There's nothing to be trading right now, okay? And this is going to spike right here at 230. Here's Powell, okay? So again, I'm going to reiterate, 230 is another session. It's a new candle, okay? It could be volatile. It could be a spike, go back down. It could just be like how it opened at 2 p.m. Could be very volatile. If we don't take a trade at 230, we might have to wait for a 5-minute close. But we can kind of judge what's happening now. It came down, came up, back down, but we're still in this demand area. US 30 is still around, holding 50% of the move right here. Yeah, I don't want to trade inside this neutral box because this is where they come down, up, down, up. You got to be really, really, really quick. With spreads, slippage, it's not worth it, okay? It's not worth it. Even on a normal day to trade inside here, it's not worth it. Why would we want to risk it just because it's FOMC? Do you guys understand what I'm saying when I say that? Who gives a shit that it's FOMC? Would you be trading inside here on a normal day? No. So why do we got to trade in here when it's high volatility? Because they want us to blow up our accounts. I might even go this entire session without even taking a trade. And you know what? I'm okay with that. I could maybe look for something in power hour. Maybe I don't even take a trade. Maybe I get a good night's sleep and I come back for London and we get some pips. You know, you don't, just because it's FOMC, we're here to educate too. I'm here to teach you guys patience and discipline. Hopefully it's helping guys. I'm more aggressive than anybody in this group, believe me. But I can show patience and discipline when I want to. Because I've been doing this for a minute, you know, I know when to be aggressive, when not to, and this is not a situation you want to be trading. Unless you got small pip and dip in your head, okay? Small pip and dips. Efren, I respect you, bro. Thank you. Okay, guys, here we go. Let's get ready. Okay, 1 more minute, 60 seconds for Grandpa Powell. Okay, what is he gonna say? Let's see. They just announced 2 minutes. Let's see what happens. Okay. But we're creating, okay, so we broke there, they pierced it down. That created a new low in the market. So we can't neglect that. That did pierce down there. It wasn't like a tweezer equal, they broke it. And we came back up. We're trading right in the middle, okay? So NASDAQ also came up, back down. It might go back up, you know, just like a normal pattern, okay? But let's see what the market gives us. And be ready for volatility, okay? You know, we're trading real calm right now, but things can pop as soon as he opens his mouth. Papa Paula's washing his glasses. But yeah, if he coughs, the market will pump. Like I'm telling you, as soon as he opens his mouth. It depends what suit he's wearing too. It might be he's wearing a new fancy suit. The market likes it and they're going to move with his fancy suit. His tie. Look at his tie. Pay attention to his tie. If he's got a money sign tie, he could pump the market. Okay, here we go. Okay, we got a green candle initially right at the 9 EMA. Okay. It's a bullish engulfing candle forming on NASDAQ. Still nothing yet. Let it build. Okay, could possibly get rejected. Okay, we're still below the VWAP. We're still not breaking anything on Bookmap. Okay, very calm, guys, very calm. Yeah, rejected. Stay, chill out, guys, chill out. Okay, we got rejected. Okay, now they're flipping it. Okay, let's look to the downside. Now they're breaking it. Okay, to the downside. Yep. But let's not just get caught down here and a wick come up. Let's focus on this area. Focus maybe on this daily break for NASDAQ. If not, they could be ranging it inside here. Just is just careful, guys. Okay, gold is holding below here. Gold might be the one that wants to maybe potentially break down, but still indecision. Guys, we can't trade an indecision candle. I'm sorry, but let's watch this one building up back to the upside. I'm only gonna tell you guys like when we're above the VWAP because we're still below it. I don't want to get you guys caught. I'm trying to do my best here, guys, to navigate, but we're still below that VWAP. So I can see like what the live depth of market, what it's doing right now. So it's just a lot of bullshit, guys. Oh, here he comes to the mic. What color tie does he have, Ben? I need to know this. Purple. Okay, guys, that's neutral. Neutral. Purple tie is neutral. I remember when he had a purple tie months ago. Fuchsia. Okay, that's a big difference. Fuchsia. Okay, we could be pushing to the downside with fuchsia. Okay, get ready, guys. Yes, it's breaking down now. Okay, but let's see if it makes a new low and maybe. Okay, he's walking it down. Get ready, guys. Okay, so like this is where you can take a sell. You know, yep, I'm gonna go in and sell here. Okay, I'm gonna enter and then stop loss like above this. It's a smaller sell, guys. Okay, I'm feeling things out down here. And then if it closes below here, I'm going to increase the position. So this is like kind of like my feeler trade of the day. Okay, I'm entering a sell on a feeler. And I want to see if volume will close here. It pierced through. I want to see how high it can come back up to if it tests the VWAP. So I'm in a small feeler sell. Okay. Yeah, we're continuing to push down, guys. So I don't know what trades you guys got, but we're pushing down. Okay. Okay, pushing down, catching a wick at the daily on US 30. Okay, we caught a wick. So guys, if you're in bigger sizes, when I say pushing down, understand what I'm saying. But catching a wick too here. Okay, we're coming right back down. Okay, to test that low again. We're pushing down. If we break here, guys, it's gonna drop. Okay. Yep. Okay, we're holding. Yeah. It's going to break, guys, break. If we break here, it's dropping. Here we go. Okay. Here we go. Okay. So, you know, catch your pips, guys, secure. Okay. I don't know what lots you guys are using, but that was a nice move. Okay. But let's now watch how this candle is going to close. Are we going to close below the daily, retest this area? NASDAQ still hasn't broke. That's why I went with US 30. Secured, Mustafa. Good, bro. Okay. Caught a wick, guys. Secured. Daily area. Yellow line. Why do we do a top-down analysis? Dropping, guys. Okay, so we broke the low. Okay, yeah. Okay, guys, I'm following Bookmap too. Let's see if it can close below here. Okay. Did anybody pip and dip out of there? Get out, grab some pips. Okay, we're coming back down. Okay, so it's coming right back down. Okay, but the close, this is going to be very important where we close on this bar. We're dropping more. Okay, dropping. Okay, guys, next red line right here. Okay, remember we did the top down. Use these levels, guys. Listen to what I'm saying. You can secure at these levels. Okay, because if not, there's going to be wicks here. Okay, don't gamble with this shit. These are big moves coming down here. Okay, down to there, that's 70 pips. Down there's 110, guys. Okay, these are not 10 pip candles. Okay, so get out of the market now. Let's follow where this candle is going to close now. Oh my God, Vincent, you went in with 40 lots? Holy shit. Fucking crazy, man. Congrats, bro, but wow. Okay, you see, guys, we caught now wicks, okay? Caught wicks. This shit can reverse. Let's see if it retests the breakout. NASDAQ still has not broke below here, okay? That's why we went with US 30. So if you're out, respect it. Get out. Now let's respect this green candle coming up. Ayush, you got 2,000. Good. Now secure and get off the call, Ayush. Okay, $2,000 where you are is big money. Get out of here. Listen to me. Don't get greedy. Okay, so let's pause on this candle, guys. Pause candle. Let's see what happens. Maybe they're pivoting the market. Maybe it's going to come back up. Okay, let's see where it closes. How is everybody doing? Everybody okay? Is everybody okay? Okay. Do you guys like that style? How I told you how it kept breaking, breaking, breaking. If you guys are in trades, I don't know what lot size everybody's using. Someone's going in 40 lots, someone's going in on a 4-cent lot. I don't know, but just I'm trying to break the market down ahead of time before it's happening, guys. I'm watching live liquidity, trying to give you guys heads up. Okay, so right now, pause in the market, guys. Get your money, get out. Don't be gambling with this shit. Okay, because we're coming right back up. Okay, you know what goes up can come back up. But let's watch. Where are we closing? Are we closing below 9? Are we closing below here? Are they going to push it back down? Okay, that's good enough, guys. If you got your daily goal, get off the call. Get out of here. You know, get your money and get out. We had to wait patiently for that move. You don't need to risk more and learn how to secure. Okay, if you made 100 pips, maybe if you want to continue trade, maybe just trade with a 25 pips, 75 in your pocket. Don't fool around. This is how you can compound your account. This is the growth of your account. Okay, so let's watch now. We got a bullish candle coming printing. Let's see where it closes. We're back in the consolidated area. Again, this is the trap. NASDAQ didn't even break, guys. So that's why. Do you guys understand why I went with US 30? Okay, look at this big bullish move. Okay, we're coming right back approaching the VWAP. Okay, so they could have came down there, grabbed liquidity and coming back up for a big bullish move. So that's why I tell you guys, secure down there. Don't get greedy. Okay, we could be pulling up. Let's watch this candle close in the next 2.5 minutes. We're tapping above. Oh, it's breaking above the VWAP, guys. Okay, so it just broke the VWAP. Now let's see if we can come back and retest it now. Okay, so we're still in this area. Let's look for something above here. And something above here for NASDAQ or a close and a retest, but we're going upside. Okay, it's pushing, 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 gold pushing. Okay, continuing. I want to see it close above VWAP and maybe we're going to head higher. Alish, I don't have time for questions right now. I'm sorry. Oh, or maybe Powell has questions now. I thought maybe me to take questions. Guys, upside, 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 upside pump. Okay, breaking out. Okay. Let's get ready tapping here. Okay. Now let's watch. We got a nice new higher high. Nice new higher high. Now let's stay above the VWAP and build. Okay. So let's see how they close this candle and follow it. Let's follow this volume. Okay. So the market may pump now. He's done. We might go regular schedule programming to the upside. Okay. Let me just show you real quick what I'm looking at on Bookmap, okay? Okay, that's why I told you guys to sell, sell, sell down there. And now we're pumping right back up above the VWAP. Now let's see if we can use it as support, okay? See how we're pulling back? That's the wick of the candle, okay? So let's see if we can hold this area and accumulate these bids. And if we can, we're gonna continue to move up and go through these offers. Okay, I wanna clear this 34,000 up here. Take this order out of the market, take this offer out. This is where we could get upside momentum, guys, okay? It's coming right back to the high. NASDAQ and US 30, the 200 EMA is up here, but we're above the VWAP. Here we go, guys, okay? So see that nice little push, okay? We're pushing, pushing, pushing. If we can take these offers out, here we go, okay? So it's continuing to go. Let's get a close on the next 30 seconds, okay? Yep, upside, upside, guys, upside, okay? Secure some profit too here if you can. We're going to a next daily area, guys, okay? Upside. Guys, we're going. Do you guys like Bookmap, or I'll go back to TradingView? But I'm showing you guys the volume. Okay, upside momentum. Here we go, back to TradingView. Okay, look we just cleared a daily, cleared 2 dailies, guys. Don't get fancy. Secure some money. Okay, here's the retest candle. Continue to retest and break out even higher, guys. Okay, here we go, guys. Beautiful. Okay, secured and done. Good job, Stephanie. Okay, great. That's good, guys. Okay, that's what we want. I don't want to see anyone with losses on this call. Okay, but don't get greedy, guys. Secure, because we don't know what's up here. Okay, there's new offers coming in the market, but we're going to continue. We're continuing tapping up there, but there's wicks. We're above the VWAP. Okay, but it could pull back down. Okay, so let's see how it holds at this daily area. If it holds, we could continue to go to upside. NASDAQ, gold, everything. Okay. Yemi, good job, bro. Good job, brother. Okay. Okay, Mustafa, 2.5%. Habibi, out. Get out. That's it. You're done. Filimehon, go home. That's my Arabic there. Okay, get out of here. Go home. Guys, breaking out. Okay, Cola, 2%. Get out, guys. Okay, out. Okay, don't risk, because if you're buying the highs again up here, what could happen is a wick and come down. Okay. Guys, I'm wow, and Keith up 150%. What is going on? Derek, you're up 13%. Good job, bro. Good job. Okay, guys. Okay, congratulations, guys. But we navigated this properly. Okay. I have about 20 more minutes to go, but we're continuing to push, guys. Next zones. Okay, remember, red lines, yellow line. Okay. Secure where you want. Leave 80%. Secure 80%. Leave 20% running if you can. But that's all you need in a day. That's it. Micah, secure 2%. Nice, bro. Okay, that's all you guys need. All of the garbage. See how we waited? We waited. And don't go piss away everything in Power Hour, guys. I don't want to hear anybody go into Power Hour and give all their profits away. Okay, don't even trade Power Hour. If you've made money, you're happy. Learn the discipline of walking away. Go on with your day. Go play with your kids. Go smoke a joint. Go outside, play basketball. Go do whatever you got to do. Just get away from these charts. Okay, because this is what can happen. These things are not going to go up forever. Okay, they will reach an area where the market will penetrate it down. Like right now, they've got a big wick and they're pushing it down. So that's why I tell you guys, get out. Okay, now we're going to possibly come back and tap the VWAP. Okay, so we went into some big offers up here, right up here, guys. Okay, we came. That's what I was telling you guys. Kept going, and that's it. Now the market is rotating right back down. It might come all the way back down to test the VWAP, but that's big profit for you and I. Okay, you don't want to give that away. This is the depth of market. Okay, good job, guys. PK 8% on day 3.5 on that last trade. Man, you're the GOAT, bro. PK, guys, shout outs to PK holding down sessions. You know, show that man his respect. Put some respect on PK's name, guys. He's doing awesome. Okay, guys. Okay, so we're continuing to fill. Okay, so if you're holding like extended runners, see how it comes down, but the volume is continuing to fill. Okay, it's continuing to go to the highs, guys. That's why the VWAP is so important. Okay, you can add the VWAP on TradingView. Okay, but it's not the same as the VWAP in Bookmap. It's not the same. Okay, I just want to make that clear. So if you guys want me to do a webinar on a VWAP, I'm more than happy. We have education on it. Not a lot of traders use it because we're so focused on a 9 and a 200. Not a lot of traders use the old school VWAP, but it's an old method. That's why I'm an old man. I like some old man methods. Look at gold. We haven't even talked about gold. Is anyone trading gold? It cleared that zone and we're going up right through here. 1940s, guys. Look at the double bottom liquidity grab into the high. Who's trading gold? Yeah, love it, guys. Like just zone secure pips, guys. Holy, this now opened up the markets, guys. This has been one of the best FOMCs in a long time. Started off real garbage, but patience, discipline. We took a nice little sell down there. and then buys to the upside. If you're happy, get out, okay? Angelos, you passed MFF phase 2. Wow, congratulations, bro. So now you're a funded man. Congratulations. That's huge, Angelos. I'm proud of you, man. When I come to Greece, we're going to have an ouzo together. I'll be there soon. I go to Saranda in the summers, southern Albania. I'm there. I'm 30 minutes away from you in Corfus. Okay, guys. So I think we had a good session, okay? Do you want to keep trading? That's up to you. That's up to you guys. But I recommend you shut your computer, you walk away. You walk away. If you got good profit, good. If you learned something, if you were on demo, you see how it moves, okay? This wasn't a crazy volatile FOMC, but if you just take your time, things are good. But that's what I always tell you. What goes up can come down. Don't get greedy. A little runner, secure 80% of the move, guys. It's money in your pocket. You can feed your family. Don't gamble this type of stuff, okay? Listen to what I'm saying, guys. We have your best interests at heart here, okay? I'm telling you guys the honest God truth. I'm here, Dave's here, PK's here, everybody here, Rob Mac, Ian, the Yoda, everybody, and all of you guys. We're here for each other, guys. We got to stick together doing this. I'm not going against market makers. I'm not competing against you guys. I don't want your money. I want to get all the bank's money. They took my money years ago, and I'm just coming back getting my liquidity from them. Dollar tanked. Yeah, it was probably expected. Dollar is going to tank for a long, long time. Look at gold. Wow. What a retracement right back to that red line, 1935, and continue maybe upside. Look at the guys. Wow. Look at the pullbacks continuing to push, guys. This is how you can use your zones appropriately. And there it is, the next fill. If you holy shit, guys, this is one of the best FOMCs ever. I think we might have to upload this to YouTube to see what we do here. Okay, great stuff, guys. Wow. I'm Ron, Joshua, you gotta hug me, my man. No worries, bro. If you see me on the camera, I'll give you a pound. Okay, pound to everybody. Get that money, guys. You know, everybody respect, get that money. You know, this is what we do here. Okay, we're all here for each other. I'm here to help you guys as much as I can. Do you guys get value out of Bookmap? Do you guys understand why I use it in my trading? You don't need to overcomplicate things with Bookmap. It can really help you guys. I know there's a cost involved in it, but we have it running here for you. I always have it here for you. If you ever ask me, Ron, show me Bookmap, I'll flip to it. You know, I always show you. But it's a nice investment, guys. If you want to take your trading to the next level, you know, if you understand depth of market, can really, really help you guys out. Let me show you what's going on with it right now. Let me show you guys the heat right now, okay? So you see how we're coming. Look at this big heat, this big red block, 34,200, okay? We're trying to penetrate this, but that's that new daily range. So this is where they might push it down. See here, all of the offers, okay? But look at all of our bids, okay? They're fighting up here. But this is where it could knock down. This is where you want to secure money. You know, like how a liquidity auction works. We're coming in where there's a lot of positions being liquidated here. All of these buyers want to get out, so they got to find some offers, okay? Demand is coming into supply, liquidating, and then if there's more supply, it'll push it back down. If the demand keeps increasing, we'll probably break this area. But you can see in the market how they're trying to hold it down currently. But it's gold is on a tear, guys. 1942. Holy. Good stuff, guys. Okay. Wow. NASDAQ is a pig. Okay. Everything, guys. Wow. Okay. Congrats, guys. I'm seeing some crazy percentage gains on your part, guys. I'm super proud of you guys. You guys made my day. I'm happy. I'm so happy, guys. I get more excited of you guys making money than me making money. I hit a couple trades too, but I didn't want that to affect you guys in the session. If you've seen I did something a little different today, I want you guys to understand that sometimes I like to analyze the markets. I'm taking trades too, but sometimes I don't want it to skew you guys just listening to a buy. I want you guys to learn what's going on in the market, okay? I hit a couple percent myself too, and but wow, Joshua, 15%. Holy shit, guys. That's unbelievable, guys. Awesome. Awesome stuff. Guys, do you guys have any questions? Okay, because I'm not going to take any more trades. I don't want to get in a trade again when I go pick up the kids. I've hit daily goals myself. You know, we had a tough session in London. Okay, remember I told you guys I got stopped out, but I said I will come back. I'll come back, and that's what I want you guys to focus on. Some session it might be you get out, come back later on. But don't keep trading a garbage session and keep revenge trading, keep getting mad, and things like that. Walk away from the markets, guys. I told you guys, I will come back. I'm confident that I will get my money back plus more. Okay. So just continue, guys, learning that. That's how the markets move. Okay. Us as scalpers, we got to find quality trades. Here's a golden cross now. Okay. So now you got a golden cross, a 9 crossing at 200. But you see now how it's crossing late. Price action can get you in trades. Guys, you just excuse me. I got a call coming from the school. 1 second. Sorry. Hello? Yes. Hey guys, can you guys hear me? Yeah, sorry. The office just called me at school. My daughter threw up and I got to go pick her up. Normally I go pick her up, but she's in the office right now. So I apologize, guys, but I got to go grab her. She threw up at school. Oh man, I hope she's not got that stomach virus again. We just we just overcame that, but I was going to end the call anyways at 3 o'clock. So I got to go. Oh my God, Scott, 520 pips. Congrats, bro. But I got to go get my little daughter at school. She threw up. But I just want to say, everybody, congratulations, guys. Hopefully you had a successful FOMC, not just money, pips, anything like that. I hope you guys learned something. I hope you guys learned patience, discipline. Hopefully you guys can continue this. I will come back to do our webinar at 6 p.m. It's going to be about talking about ticks, pips, percent, or money, our mindset. So let's not focus on money. Let's try and focus on a percent of an account or a daily goal of pips. It will change your perspective, change your mindset. Don't always worry about money. Money will come. Money will come. Learn the skill of how to do this, guys. So respect. Thank you, guys. It's continuing to go to the upside. It continued, but this is going to possibly retrace down, maybe in power hour. Look at your levels. So I use these critical levels like to short the market. If it closes below this yellow line, retest and drop if you guys are going to continue to trade. But God bless everybody. I got to go get my little baby at school, and I'll see you guys tomorrow. And hopefully you guys had a good session, guys. Okay, so God bless everybody. I love you guys, and have a great session, guys. Thank you, guys.